In this session, we are going to be discussing operational resilience and indeed many other aspects of resilience. And with me to discuss these issues is Otti Vogt, who is the Chief Operating Officer for the challenging growth markets of ING, the large Dutch bank. Welcome, Otti.
Thank you very much, Julian. Pleasure to be here.
Perfect. So I'm going to start with a pretty straightforward but very big question. You know, we live in a hugely unpredictable world. In such a world, it's important to be agile, but it's also important to be resilient. So just give us your take on what exactly these words mean and how you get the balance between them right.
Thank you, Julian. I think it's a very interesting question and also much discussed during these last weeks. And the way I've made sense of it for me was I see actually three terms. And the first for me is robustness. And robustness I see as the ability for an organization to withstand shocks, so to speak, until it goes down and falls over. Whilst resilience then relates to how quickly can it get back on its feet. And I see agility related to that. So it's also about flexibility, but I think more about throughout time in an evolutionary and emergent way to adapt and improve. And we always say agile at its core is really to get best at getting better. So in that case, resilience bouncing back, agile continuously improving. I think there are maybe a number of thoughts that come to my mind. Resilience is also a little bit in a paradigm where we believe we can plan for the uncertain and failure is bad. Whilst agility, I think, is more coming at it from planning actually is not possible in an uncertain world. And therefore failure is good. We very often say, think big, start small, fail fast and cheaply and learn fast. But maybe in this regard, going back to your question in terms of what is required and where's the difference. So from agility vis-a-vis resilience, I would say what agile is not necessarily aimed at is sudden recovery to big shocks, right? So external events happening, what we say, so low frequency, high impact events. This is where I see practice and methodologies like business control planning and business control management or business continuity management coming in, which are very much aimed at understanding the threats that could occur, mitigating or building mitigating plans, testing these plans, training people. And in our case, it's very much around disaster recovery, crisis management, and contingency planning. So there I would say I see a necessity on top of an agile organization to also have business continuity. Now, I do remember that you once, in a Forbes article, wrote that agile could be fragile. And indeed, I think your argument at the time was that agile is very good at capturing upside opportunities, whilst resilient relates more to downside risk. And I think there is something in it where, however, I would argue it very often also relates to the culture or the context of the organization. Because what we try to do very much is in an agile delivery model that we've got, to build in robustness, to avoid that fast and continuous adaptation creates incremental risk to the business. And here I think culture plays indeed a very big role. And in our Orange Code, integrity always goes first. And maybe one final thought in response, what I've seen during this crisis, which many people thought was a bit of a black swan, unknown event, even if I think there's a lot to be said whether we could have predicted it or not. But what I've seen is that the contingency plans that had been in place were not always sufficient to really come to terms with this crisis fast. So people had to ramp up additional methodologies or additional resources quickly. And here I found certainly in ING that an agile organization brought some advantages to the forefront in regards to the trust that was already embedded in the system, the information flows. In Agile, we very often say a maturity indicator is how quickly bad news travel in an Agile organization. And also the ability to locally adapt under a global crisis management umbrella. And I think simply the fact that we as people managers, as leaders, are very people-centric. So that notion to quickly put our people in safety I think was an immediate reaction. And I have to say, with the ING response in this crisis, I was very, very satisfied, extremely proud of how the teams reacted.
Otti, let's dig into some of the aspects of resilience that you touched on there. I want to unpack a few of them. We'll take financial resilience first. How do you think about financial resilience in terms of ING Bank as a whole?
Thanks, Julian. I would look at resilience from three different aspects. One, liquidity and funding. The second, probably being capital and credit risk. And lastly, profitability. And maybe going briefly into each of those. So one, in terms of liquidity, on the one hand, being in this current great cessation, what we are seeing is that many of our borrowers require cash at short notice to overcome the difficulties that prolonged quarantine brings with it. And so I think Richard Portes has been talking about the dash for cash in this context. And banks here, of course, play a very critical role in providing that cash to our customers who need that liquidity. And this could become an issue for a bank if the liquidity is insufficient. Why could that happen? For example, if there was a bank run, or if our depositors start to take out their deposits or withdraw cash from ATMs and so on, or if alternatively we cannot get liquidity fast enough on the financial markets because of the conditions of the market, or refinancing being difficult, or the requirement to sell off our own assets. So that would be on the liquidity side, I think, the main issue. On the capital side, I think what we've observed is that going into this crisis, households and businesses already had significant amounts of debt. So the anticipation, the forecast is that some of the customers of banks will not be able to repay all the debts after this crisis, which of course means that depending on the composition of the loan book, we will see an increase in non-performing loans. Now, banks are very highly leveraged in themselves in terms of the assets to capital ratio. So here we need to make sure as banks that we have sufficient capital reserves to cover any non-performing loans, because otherwise we wouldn't be able to reimburse our depositors. And that's, I think, the main problem on the capital side. And then lastly, profitability, because of course, through the non-performing loans, the risk costs increase. And together with a decrease that we see around the world in interest rates and GDP reduction, which triggers to a degree a reduction in sales and volumes for us, all of that creates a reduction in profit after risk costs and in return on equity, right? Which again decreases our ability to accrue capital ourselves. So I think, go on. So for me, the point is straightforward, which is, of course, that financial resilience is gained by having, a hugely cash-rich balance sheet, and you can do that, but obviously that's not very efficient. And there's all sorts of textbooks have been written over the years that says we've got to put our balance sheet to work, we've got to get the right, mixture of debt and equity and so forth. How do we get the right balance here between, on the one hand, using our capital well and ensuring ourselves that we don't become susceptible to huge shocks? You're absolutely right. This is a fine balance. And on the one hand, of course, what we've seen since the crisis in 2008 is that the regulatory environment has significantly encouraged and demanded the European banking sector to build up these buffers in terms of capital to overcome any potential losses and also increase the quality of their capital. So on the one hand, there's a regulatory requirements that we have to meet, right? In terms of ING's position, for example, which is well above the regulatory needs. Again, I think, as you say, it becomes a bit of a management judgment to say, based on kind of my loan book, based on my forecast, and of course we're continuously stress testing all the different sectors we are engaged in, how much buffer on top of what I'm required from a regulatory perspective to maintain do I want to have? And kind of, for us, I think traditionally the answer has been we want to be on the safe side, and not only for capital, but also, by the way, for diversity of funding and liquidity in general. And I agree. I would maintain that it is that fine balancing. So you understanding what the risk is, understanding how much capital would be required in the short term, and alternative needs and profit from that capital.
Let's move on now to what I'm going to call operational resilience. In other words, the resilience of your core banking operations, particularly with regard to the underlying, technological kind of infrastructure. I mean, banks live on, strong IT systems. Can you give us a little bit of a glimpse into how ING Bank has ensured the continuity of its operations, its technology, at a general level, and then we'll dive into the specific distinction between different styles of development?
Of course, what comes to my mind, having been a Boy Scout in my youth, is this motto of the Boy Scout, which was "Be prepared." Estoto parati, as they said. And I think here again, as I mentioned earlier, business continuity planning, so the preparation for major external shocks or outages or disasters, is, I think, very important. And in regards to that, it is a lot of work that has been done already in relation to, for example, eliminating single point of failures, right? That both in the technology state, but also in the operational state, documentation of critical processes, cross-skilling, right? So that you can balance workload. And again, it's in the IT domain, but also in the other business domains. Contingencies for critical roles, supplier risk management, because what sometimes is forgotten, we are also dependent on a wide ecosystem of other parties to provide our services, or facilities, right? So dual housing or alternative locations that we can build on, particularly in these times where we have to find ways to make sure that we are safeguarding our staffs. So I think there's, on the one hand, it's the preparation that is independent of technology operations, extremely important. Secondly, what I've observed is in terms of crisis management, so the second part of business continuity management, companies that had well-trained crisis management or even dedicated crisis management departments, generally speaking, have an advantage, right, over others in terms of building up that response, and also making sure that throughout the crisis, there's daily monitoring of all relevant indicators. So that's customer indicators, people health indicators, availability of the infrastructure, cyber defense and fraud, et cetera, right? And not least important, the regulatory requirements, because of course, the regulators need to have from us as a globally relevant bank, systemically relevant bank, a lot of information for this crisis. Now, going a little bit maybe onto your question on technology, I think the first thing, if you think about the phases of the crisis, the first thing was really to enable, on the one hand, customers to continue to be served, and on the other hand, the operations to be working remotely. Right? And in both areas, we needed to harden the access for customers who couldn't use the branches anymore to services, or even expand the available services. So, for example, setting up processes to remote advice for a mortgage product, which originally people would go into a branch for example. In terms of the operations side, enabling people to work from home. On the one hand, they need to have laptops, and not everybody has laptops. They need to have the collaboration tools. We are working out of an environment which potentially is more prone to data leakage or to cybersecurity or cybercrime rather. So that whole vulnerability management, data leak protection, etc. So all these things come into play, and to a degree in an environment that had not been tested before for that use. So the IT departments have been extremely busy, I can tell you, in that crisis to make that all happen. And I was impressed how more than 40,000 people went to working remotely in the frame of 2 or 3 weeks. Right? So it was, being a very digital bank by our very nature, of course, has been very helpful in this crisis.
Let me now home in on one specific area. ING is quite famous now for its agile ways of working. And of course, agile has a particular meaning to a software developer. Agile is a methodology which is about rapid iterations, working in small cross-functional teams, working closely with users, and deliberately changing things sort of as you go. And in a typical agile system, we don't spend a huge amount of time building up huge systems requirements in advance. You don't spend anything like the same amount of time kind of doing all the tedious quality assurance stuff in the back end. And of course, there's a risk that such agile development actually kind of is a shortcut and allows the possibility of failure in a way that the kind of classical waterfall development systems of the past did not. So what's your thoughts on that? Is it possible that this agile way of working can be every bit as robust, to use your language, as the classical waterfall methods?
Now I need to take a big breath, because of course that notion that agile inherently would be less robust than a waterfall type system, I would very strongly contend. Now, maybe a few thoughts on this matter. One, agile is of course a product development set of principles, and there are methodologies like Scrum that underpin that. So it's not a project management methodology in itself, right? Which I think the comparison therefore is not entirely right to a degree. But you're absolutely right in terms of agile being more evolutionary and then being in sprints and collaborative and bottom up, as opposed to the central planning, which is inherent in a waterfall type methodology. Now, in response to, is agile less robust? I strongly believe it doesn't need to be so, because what developments or user stories or features I prioritize on my backlog is very much determined by the priorities that the teams are executing against, right? And for a bank, which is of course a very strongly regulated sector, so to speak, business continuity requirements or risk and regulatory requirements in general are very much part of that prioritization mechanism, right? So in our case, I would argue that is certainly not a big risk. And secondly, it's also probably to do a little bit with the culture, where our culture is always focused on integrity first. So that notion that we have to build in a robust way is very prevalent in everybody who's engaged.
And can I just follow up that with a very specific, and I just genuinely don't know the answer to this, but when you're using your agile methods to develop your IT systems, are you then required by regulators or just through your internal kind of methods to then document and quality assure them to the same level of the same high standards as you did in the old days when everything was done in a waterfall methodology?
Absolutely. Yes, we have to. And I would say to an ever more stringent set of requirements. But I think there's also the notion of waterfall, going back to your original point, where, I mean, waterfall is an evolutionary mechanism, like you explained it. Waterfall is a sequential type of development, where basically I gather my requirements, I design the system, I code it, I unit test, I system test, and then I do user acceptance testing, and then I hand it over, right, after having fixed all the bugs. That's a typical waterfall type of way. Now, the premise upon which I can build such a flow is that I can gather the requirements appropriately. And this is normally where we see inherent risk in waterfall, because particularly if it's a very complex type of endeavor, the ability at the beginning of the project, when we know least about what is going to happen, to fully document all the requirements is very, very complex. And of course, making changes later on in the process becomes very, very costly. And so the notion that waterfall would be more robust is only true if you have very, very good information at the beginning and very, very strong predictability in terms of any changes that might happen in the environment afterwards. That said, I would still maintain that if that is the case, or if there are projects where you have to operate to hard deadlines, because of interdependencies or regulatory requirements as a typical example, then indeed a waterfall type approach could be where you want to go. But I would say the other strong argument is agile, and you know me, for me, it's more than a methodology. It's really a metaphor for a human-centric learning organization, and it transcends IT, and it also, I think, transcends methodology for execution. It's really a mindset, and it has a lot of implications for leadership. And so in that context, I would argue that not every company is maybe at that level of maturity to embrace an agile style. And I think someone suggested that if waterfall fits, go with the flow, to drag on that metaphor. Yeah. Right? So to a degree, it's also a choice as to what your culture can best operate within.
Yeah, good. So let us now move to the third and final sort of aspect of resilience I want to talk to you today about, which is this notion of behavioral or organizational resilience. In other words, the kind of the people side of things. You've touched on it already, but let me just push a little bit further. How do you, as a senior executive within your company, think about helping your people to be, shall we say, personally resilient, particularly in these very uncertain times?
It's a very good question, and one that we have asked many, many times throughout the last weeks. Now, I guess there are different ways to look at this. One way is that, in my belief, leaders have to be very able to sense the energies in a system or in a human system, and appropriately kind of adapt to that. So in the way that I'm looking at leadership, there are four basic human needs, and those are true in a crisis as in so to speak normal times. There's a need for a sense of orientation. Right? People need to understand where things are going, and particularly in times of uncertainty, that is sometimes difficult to attain. So in this regard, I feel two things are important. One, kind of to reestablish some boundaries that people can work within. It's like a rail type of certain things remain certain, even if everything else is not at this point to be defined. At the same time, being honest about the fact that not everything can be determined yet. Right? So, but somehow creating a holding environment for people to operate within, I think is very important. Secondly, that sense of belonging, which is the second, I think, most important human need. So if people are in isolation, reestablish that social intimacy and closeness, which again, I would maintain in an organization that is trust-based, like that has psychological safety, is sometimes easier because people already know each other. They have been working with each other at a very close personal level. And then thirdly, I think autonomy. And then in autonomy, again, it's very important to put people back into a position to operate. And again, this goes back to having collaboration tools. This goes back to having the procedures when working remotely reestablished, etc. And then it's also kind of course, introducing new procedures. We mentioned payment holidays. So very quickly to give people the means to work. And if there is a necessity to flex around different departments, to find routines, to reallocate, but again, giving people as much autonomy as possible. And so ideally what we have seen, we maintain all the agile retrospectives and daily check-ins and so on. And we've in most cases found ways for people to reallocate themselves based on the needs and the capacity and demand that we've seen. And so I think those would be some things. And then the fourth driver is self-esteem. And here again, I would argue being there for people, checking in continuously, and sometimes I found it difficult to really sense where people are in their own minds. And if people are suffering from anxiety or might be part of vulnerable groups, it's sometimes difficult to sense that over a video conference, right? So I think leaders have to be extra careful to really understand the signals when people are getting in trouble. Right? Because they might have difficulties in their home environment where the boundaries are blurring between personal and work environments, or they might have other issues with kind of infected people or maybe even deaths in the family, or they might be, because of their character, more vulnerable to anxiety in these times. And as a leader, we have a duty of care. Hence, we need to be very, very sensitive towards kind of what is happening there. And maybe final point that we found has a very important impact on organizational climate, so to speak, in general, and that is fairness. And again, fairness in these times, just think about branches having reduced staff, right? So the question becomes, who should work in a branch at a potential risk of kind of exposure to the virus? Who can work from home? And so questions of fairness, or in one country, there might be an extra allowance being paid for people working remotely, or an extra bonus for people working in an office building, right? So if there is no fairness in the system, that will very quickly create incremental frustration. And that is something that also I think leaders should watch quite carefully. Right, so across these drivers, so sense of orientation, autonomy, self-esteem, and sense of belonging, plus fairness, those are kind of 5 points that I always try to go through in my mind and make sure that I'm watching these.
Well, thank you very much, Otti. We must stop there. We are out of time. It's been fascinating talking to you about all these different aspects of resilience, and I wish you and ING well in the coming weeks and months.
Take care.
Thanks.